Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern time as we come into the opening bell. And right now, folks, quite a negative market overnight. We check out the S&Ps. You're trading down 49 points. That's 1.3% in the red right now, trading at 37.55. You take a look at where we were for yesterday's spike lower, just below where we were actually at 8:30 in the morning following the CPI print. 9.1% inflation, quite a rebound yesterday, but man, those markets, they basically give it all back overnight. We're trading right now right near the lows of the beginning of the session yesterday, about 24 hours ago, trading at 37.55. You're about 13 points off the lows that we made about a half hour ago. NASDAQ 100, the strongest index out there, down the least. You got the S&Ps off 1.3%. The NASDAQ 100, you take a look at where we are, not quite at those lows. NASDAQ 100 only down 0.8%. We got the banks out with their earnings. JP Morgan, they're stopping buybacks, making sure they have enough cash to weather whatever storm we have coming. We'll get into those in a moment. The Dow, quite a different story, right? Well below where we were yesterday on the spike lower. You're talking about 300 points below where we were yesterday on the spike lower. The Dow off 1.6%. Not often do you see the Dow leading the way, as in the Dow's off 1.6, S&P's off 1.3, NASDAQ only off 0.8%. Russell off about 1.5. Russell sitting right at 1,700, where you were right at that acceleration yesterday. And boy, you talk about some dollar action, some commodity action. There is action everywhere in this market, folks. Crude oil, $94 on the dot, right back to where you were late Tuesday night. We had some volatility in both directions yesterday. You actually got 93.24 was the low. Look at the drop off we got going right now. Even in the last hour. Interesting action across the board. Gold pulling back on a strong dollar. Look at gold. Give back all of yesterday's action. You want some volatility. Gold comes into the CPI number at a price point of about 17.30, we'll call it. Trades down to 17.05. Trades up to 17.45 right away. And we're back to 17.05, man, in that gold contract. And check out the action in notes and bonds as well. Quite the reversal in pretty dramatic fashion. The 10-year yesterday was at 118.24. You trade down a full point, you trade up 1.5 points, and since then we've lost a point. Not usually what happens in the note and the bond market, but man, we are living in especially volatile times right now, folks. And as we jump over to the VIX, volatility index this morning, not even back up to where you were at the highs of the spike on the CPI. We're sitting at 28. It's still not far off from where you actually came into that CPI number. And think about the volatility we've had over the last 24 hours of trading. And you got the VIX just basically just above that elevated level. The VIX, folks, if you're trying to trade the VIX looking for a pop, you can. But man, you were at some lofty levels, and we need to get some huge action in the markets to get some real movement in the VIX. But guess what? We're getting it, because the S&P right now, folks, from just where you came into the CPI data yesterday, right? You're down almost 90 points, okay? Let alone the initial spike high you got coming into that number. You traded from 38.60 down to 37.42. You're talking about 120 S&P points. You're talking about 3%. Let alone in the middle of that, you catch a bounce of almost 2% from a low of 37.52 yesterday intraday to 38.34. What did I say the low was? 37.52. 38, 30, 82 points. Yeah, more than a 2% pop in the markets yesterday. And we give it all back just like that. All right, let's jump into some of the headlines. And before we do, though, how about some of the currency action, man? We'll jump to the euro-US dollar first. Okay, right at parity right now, folks. Now, you want to see some action, though? How about the yen, man? Dollar-yen. It's not stopping. That's a 15-minute chart, folks. We just hit 139.38. We're trading at 139 in the yen. It's a big reason the gold contract is facing some serious resistance, trading lower. What's going on with the dollar and with currencies? You put this thing on a daily, it's just not stopping, folks. Not that long ago, 6 weeks ago, the yen was at 126. We're at 139. And man, if this is an A to B, C to D, let's see. I mean, we're almost there. Think about this. A point, 115 back in March 4th. B point, 131, somewhere in the beginning of basically end of April, beginning of May. You make a C point at 126. Your A to B is about 15 points. You add the 15 points onto 127 and you're at 142. You're only 2 points away from that. And who would have thought that an A to B, C to D would be forming on this initial pullback if he said it's got a 15-point A to B, C to D leg that's forming in the end, you'd say, my goodness, that can't be. That would take it to 142. Guess what, folks? That seems to be maybe where we're heading in the end at 139.08. Remarkable. All right, let's jump around to some of the banks real quick. JP Morgan, back to a 15-minute. They're down 4% right now. What are they down? Down about $4 from 111.91 to 108.20. There's their earnings out. The conference call beginning at 8:30 in the morning. You're trading at 108.15. This thing's had quite a pullback, man. You look at those woes. Yes, interest rates are going higher. They might be able to make a little bit of money on that. What they're not going to be able to make any money on is if the economy pulls back. All right, and let's get into it. JP Morgan, not the headline you'd want to hear on a macro basis, okay? Halt share buybacks as earnings miss estimates. They added $428 million to reserves for potential bad loans. All right, keep your eye on this, man. Diamond's no fool. He's not doing this out of the kindness of his heart, okay? He's doing this because he's assessing the probabilities of risk that his company could encounter. He says the firm is preparing for a range of economic environments. That's what you got to do, folks, okay? You make a probability assessment of what possible outcomes can come, and then you make decisions based on those probability assessments. No one knows for sure what's going to happen right now. Where you line up on those probabilities and how correct you are on those probabilities, that will define, how much you make and whether you survive, of course. But they are pausing the buyback, temporarily suspending share buybacks, and they report the second quarter results that fell short. The buyback pause is needed to quickly meet higher capital requirements and allow us maximum flexibility to best serve our customers, clients, and community through a broad range of economic environments. That's Diamond saying in a statement this morning. So they added $428 million. That marks a reversal from last year when the firm results were padded by a $3 billion reserve release. Now, we go in cycles, folks, okay? When you think the world is over, it's not over, as we've seen in the last 2.5 years during the pandemic especially. And we will go in cycles here. The Fed is bringing it. The conversation has now shifted. Basically, I think it's to 3/4 of a point to a full point for their coming meeting. I think it's July 26th and 27th is their next meeting, later this month. Eventually, they will get it under control. But man, the next year, folks, it could be very volatile in these markets. You may see the banks need to add more, depending on what happens to the GDP. Diamond said that while the U.S. economy continues to grow, with consumer spending and job market both healthy, geopolitical tension, high inflation, uncertainty over rate hikes, and the impact of the war are very likely to have negative consequences on the global economy sometime down the road. We're prepared for whatever happens. So investment banking fees declined 54%, more than the 47% they were thinking about. The division also hurt by $257 million of markdowns for held-for-sale positions in the bank's so-called bridge book. Trading revenue jumped 15% to $7.8 billion. Analysts were looking for 17%, though. And they're already down this morning. So regulators will require its common equity Tier 1 ratio to be 12.5% by the first quarter of next year due to harsher stress test results and previously flagged increase to its buffer for systemic importance. That's up from 11.2% at the end of June and higher than the 11.7% the firm told investors just 2 months ago. So they got to keep more cash on the board, no more buybacks. Long term, probably a good thing for all of us. Short term for the economy, we'll see. Stay tuned, folks. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P right now negative by 53 points, putting this thing on a daily basis. We have a low out there, folks, made the middle of June. June 17th was the exact low. Let's zoom in on this action. June 17th, the exact low. On June 16th, you make it as low as 36.42. Excuse me, the next day we get a few points lower. We're only trading right now, folks, about 110 points away from that low. We got 4 big red bars. Not that long ago, you were trading at 3,900 just 3 days ago. Yeah, to start off the week, 3,900, right? 5 straight green days, 4 straight red days coming at you just that quick, 37.50. And now we're at the critical point that we're at the lows you made at the end of June. June 30th, July 1st, and then over the July 4th weekend when we popped higher. We're right there, 37.50. Taking a look at the dollar index. We talked about the currencies. That dollar index, now this is just a month, folks, okay? You go back to June 27th, the dollar index was at 104. We're pushing 109 right now, let alone you put this thing on a 6-month chart. You go back to February 1st, dollar index, 95. We got a 95 handle in February. We're pushing 109 right now in the dollar index. Absolutely remarkable. Folks, if you head on over to the front page of TFNN, I talk to our man Teddy Kegstad every Wednesday. We had a great interview with him yesterday talking about the markets, talking about crude, talking about the note and bond market with CPI, with the Fed, and of course talking about some of the Forex action. The Tiger Forex report, so this deal only runs through this month, folks, okay? You can get 25% off for the life of your subscription. I encourage you to try it out with everything going on with the yen. Teddy says some great calls, man. We'll take a look at the yen again later in the program. Outstanding in terms of just that acceleration in the yen. And if you trade gold, folks, if you trade commodities in any way, what's going on right now in the globe, when you look at interest rates and how the impact of interest rates, the impact of energy, how all of that is combining for the impact on Forex markets, which then in turn is combining to impact back on commodity markets, back on fixed income markets, and of course back on equity markets. So check out the Tiger Forex report, enter the code TEDDY25, and try it out for a month, folks. You will get value out of that for the month. I guarantee that one, no matter what. And if you don't like it, you get a 30-day money-back guarantee. So what do you have to lose? You get to read it. You get to check out this Monday's report that he had out there. The archives are up there. And yes, and then, of course, you get the new issue delivered on Monday. All right, what else we have going on? Let's jump to Morgan Stanley. So Morgan Stanley misses estimates. They're basically flat. Oh, apologies. We do. We have our man. Kevin, Let's jump over to man Kevin Hincks from TD Ameritrade, folks. Every trading day, 12 noon Eastern time, fast market. And boy, shame on me. We got a lot to talk about in this fast market. Kevin, it's been an interesting 24 hours since we last talked to you. Good morning.
Good morning, Tommy O'Brien. Yep, you and I talked about yesterday how some of that CPI data might be discounted because of, when it came out and what commodities have done since then. Well, you might get some of that with PPI again. Actually, I would call the PPI data we got today, and full disclosure, Tommy, this is less, there's less market reaction to this number than some of the other inflation data that we get. But I would call this number mixed, Tommy. The headline number, the one they're going to put on the headlines and in the news, is ugly, up 1.1% and 11.3 year over year. But the core, once you start getting into the core, the numbers were pretty good misses in terms on the good side in terms of the core. Ex-food and energy up 0.4. That was up 0.7 a month ago. 9.7 year over year a month ago, now 8.2. So some of the core numbers are coming down. You've seen, after the banks came out this morning, futures were down. After this PPI number, futures have actually recovered slightly. Now they're not anywhere near unchanged on the day, but they're less. And remember, the market basically opened on its lows yesterday. The dollar, right on the open, right on the 9:30 Eastern open, was on its highs of the day. So be careful about how you trade this opening morning because, Tommy, let's face it, it's neck brace season here trading these markets because you are getting pulled forward, backwards, all over the place by these markets intraday. And even though yesterday's numbers didn't show much overall movement, if you were watching these markets minute by minute, they were all over the board, Tommy.
Yeah, you almost can't overstate it, man. The moves don't look as large as they actually are because even on a 5-day basis on the S&P right now, I'm up to 39.22 last Friday. Yesterday's action, I think we got a 2% pop intraday, Kevin, and now we're just sitting right below where you were on that acceleration on the S&P, at least, just below where you were trading at on the initial thrust lower on that CPI number. Some great points about the PPI on a core basis. Right, 0.4%. You annualize that times 12, that's 4.8%. Would kill for 4.8% right now if that was what meandered throughout the market in completion. But there's a lot of parts of that. I'm seeing a lot of articles this morning, Kevin, about rental prices. We talked about it yesterday, just a huge impact on the CPI number, shelter. And I think I saw today Manhattan alone, $5,000 per unit or something like that. Record prices rental. So there's a lot going on in this market, of course. What's your take on the banks? Morgan Stanley somewhat flat. JP Morgan, they're trading lower. No more buybacks as they kind of shore up their balance sheet. What's your quick reaction on the banks coming out?
Tommy, it was a couple of weeks ago that Jamie Dimon put out his hurricane comment that we all heard. And nothing in their earnings surprises me other than stopping the stock buyback. That's the thing that tells me that Jamie Dimon has his defense on the field for the next at least quarter or so. The $428 million in the loan loss reserves, the whispers were for higher, actually. Okay. And I think even though the consumer is strong, deposits are strong, the advisory fees from M&A and IPOs have basically gone to zero. So, and even though they're getting more profitable per loan activity has dried up. So I think Jamie Dimon is putting a big red flag on the momentum of this economy, Tommy. That's my take on the banks.
I think it's a great take. It's my take, too. I mean, he is not doing this for fun, man. Taking that money, putting it aside, he is making sure that they are shored up for a probability that is somewhere above zero, that he thinks things will get bad. Where that number falls in terms of the probability that we really pull back here, that it really hampers the economy, he has some percentage in his mind that that's a scenario that plays out, and we're all going to find out where it goes out. But yeah, shoring it up, and that's a company, as we all know, man. You can't run it like the airlines and just hope everything goes well and then go BK. They got to make sure they plan for everything, and one of those scenarios, and he's a bright guy that he's planning for right now, folks, is things get a little rough in this economy, to put it lightly. With that in mind, Kevin, it's Thursday. We got one more trading day in the week. What are you guys talking about coming up on Fast Market today?
We pivoted yesterday and didn't cover Boeing, so we'll cover Boeing in the first segment of today's. And then, like Folio is going to do a presentation on Lululemon, the apparel retailer, and then we'll cover earnings tomorrow morning on Wells Fargo. So Boeing, Lululemon, and Wells Fargo, all over the board, Tommy, just like this market.
Some interesting stocks, man. Boeing, boy, I keep taking a look at that. Quite a little lift. We were just trading June 113 earlier this month, last month, about a month ago, 113 to 143. And yeah, how about Lululemon, right? Getting ahead of itself to 485. You traded about 280. I got it up on the Thinkorswim platform, Kevin, from the run from 128 on the COVID lows to 485 just late last year. It pulls right back to about the 618 retracement. I like those Fibonacci's myself sometimes, so chopping around at about 280. Well, Kevin, we appreciate the time. We appreciate the analysis and the education as always. We'll be watching at 12 o'clock, man. Have a great day. Have a great weekend, all right?
Thanks for having me on, Tommy.
Always a pleasure. Folks, tune in, 12 noon Eastern time. You heard it. Boeing, Lululemon. Look at this chart, man. Look at this pullback that they'll be talking about. Check it out, folks. 12 noon Eastern time every day. We'll be right back when the market opens. Stay tuned.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and they pretty much open right where they come into things. We got the S&P down about 50 points. You're negative 1.3%. You got the NASDAQ 100 off 0.75% right now, trading down 85. The Dow off 1.6% right now, trading $493 in the red. Let's jump over to JP Morgan and see how they like that they stopped share buybacks. I don't think they're going to like it, folks. Yeah, they don't like it at all. Down 4.2% at 107.34. Tough to find a bid there on the banks, where one of the brightest CEOs on Wall Street's telling you, listen, we're taking cash. We're not giving it back to you. We're just going to put it on our balance sheet because things might get pretty bad in this economy going forward over the next 3, 6, 9, 12 months. Now, excuse me, it doesn't mean that's going to happen. Okay, they put all that money aside during COVID, right? And then they got to just take it right back out, $3 billion just last year. When the Fed goes through their cycle and there's less volatility and it's much easier to forecast where this economy is going, where inflation is going, they'll come out the other side of this. That money will go back to investors. At some point, I imagine these banks will be a buy, man. You know, I mean, look at this acceleration that you're talking about on the banks here. You put back a 3-year weekly, you're coming into the first spike that we got during COVID of June 1st, right? Now, let's back it up even further than that. You see the acceleration we've had, though. JP Morgan, man, coming out of the doldrums from $44 up to $172, even though you look where we are, chopped around at about $60 for a while. COVID low is about $80, but you're off of $173, man, trading at $107.80. They're stopping the buybacks. So eventually, you know, to look at this side of things, I'm not buying JP Morgan right now because volatility is persistent. Man, it's tough to buy anything in this market right now, folks, okay? Because if you see downside in this market, right, 3,200 is totally in play in the S&P. Everything's going to trade lower if that's the case, okay? I don't see this skyrocketing back up to 4,400 anytime soon, all right? The Fed has quite a mission ahead of itself, and this market is not going to go skyrocketing upwards. Well, we have inflation coming in at 9.1% and unemployment at 3.6%. You got 1.9 jobs open for every unemployed American. You add it up, man, they got to bring it. And we got some tough roads ahead of us right now if inflation persists. The one thing I will say is that they're not in charge of it all. And hopefully some of these supply chain woes sort themselves out, right? China could continue to be a big problem, though, folks. Is Macau still shut down? I think it is, right? Did they shut down at the beginning of this week? Time flies so quickly. There's a chart of win. You want some exposure to China, this might be a good way to get it. But you're dealing with some real volatility, man, when you're talking about that they just may close down the casinos for a full week. And, folks, they're only dealing with cases that are like 1,500 cases over a month. Point being, if you're trying to have zero COVID on an ongoing basis and you have to shut down entire cities with millions of people for a week every time you get 1,500 cases, that thing's going to rinse and repeat itself over and over for as long as I can imagine. But if you are looking for some action, folks, I mean, look where we are. We're right back to where you bounced in 2015 on win. You're right back to the COVID lows. I mean, things couldn't be worse, but here we are, right? They're kind of still dealing with COVID lows over in China, considering they're shut down. But a nice critical area in terms of an area of support that we're at for win. Now, you did get as low as $16 during the pullback in 2009. Yes, the pullback in 2009. I had to do it myself. But, boy, quite a haircut for win, back to $53. Let's see how MGM is trading. There's quite a monthly for you. Zooming in on recent action. Yeah, so they're not as in much pain as Win is, as they're almost just back to where you were at the beginning of 2020, let alone Win is sitting almost at COVID lows. All right, let's jump around to some of the other stories we have up here. You heard Kevin talking about the PPI, this number out this morning. Producer Price Index for final demand increased 11.3% from June last year, 1.1% from the prior month. That followed upward revisions to the May figures. 3/4 of the advance last month was due to goods, particularly energy. The food issue, the energy issue have to go away for CPI to come under control. And the problem is that energy has to do with war, and the food, to some degree, has to do with, number one, commodities are playing a role in that. But war is part of that food element as well, okay? And supply chain woes are part of that element as well. It's not all about the Fed, and that's the scary part when you come to this market, man. This is not a normal market where you have supply chains functioning, and all you are doing is affecting demand to interact with those working supply chains. We have broken supply chains, which is causing people to pay for the limited goods that are available because supply chains are broken, and then they're transferring that to consumers. You really have to crush demand to hurt the pricing of a product that is in limited supply because of supply chain woes. Think about that, right? That's usually not the Fed's mission. That's one of the impacts we're dealing with right now. Hopefully the Fed realizes it if that's the case, right? I mean, there's no point in hiking interest rates. And I'm not talking about not hiking right now, folks, okay? Because they need to bring things back into equilibrium of some form. But let's say they hike 75 basis points again in July. Let's say they bring it with 2 more 75 basis points hikes after that. And then let's say we're still dealing with CPI numbers that are crazy because of energy prices, right? Let's say we're still dealing with problems because of supply chain woes. Should they really keep hiking? Is that going to matter? That's where they really need to analyze things and see whether it's worth crushing the demand if that's not the only thing having an impact. Now, here's what I will say. We're dealing with some lofty energy prices, okay? Time flies, folks, and this market is selling off a little bit. We're at 37.40 right now in the S&Ps, okay? Now, let's check out the price of crude right now. Crude continuing to drop. We're at 92.53. You back it up to the low of April, we're below that level now. That was 92.93, folks. Is this the lowest level we've seen? You're talking about the lowest level for the price of crude since February 25th, since it broke out. It's an important level. We'll see where we go from there. You start making a run to $85 to $80. I don't think we thought we were going to see $80 when you were trading at 110 about 2 weeks ago. You were trading July 5th at 111.45. And we might get an 80 handle in the price of crude. That would be helpful to the market in a big way. Point being here, energy prices start spiking in February. Really, we'll call it March, okay? March 1st, you break from $97 up to $130. So since March, we have energy prices that have been above, is that right? Yeah, I had to do it again. Basically above $100. We'll call it above $95, okay? We're sitting at 92. You can call it $90 if you want, okay? That is March, April, May, and June. 4 months. 4.5 months if you count July, okay? In 45 days, we will have crude prices that have been sitting at $100 for 6 months. Well, folks, 6 months from right now, the energy prices that we're going to be comping out against, keep this in mind, okay, are going to be these energy prices. This is the comp we're going to be dealing with. That should help things. That's only 6 months away. It seems like a long time away, but the Fed's already got baked in, what, 75, 50, 50, something like that. There's 3 meetings that's already baked in, okay? So think about it. The market already knows that rate hikes are coming. They're coming for the next 3 meetings, 2 meetings, 4 meetings, okay? They're coming from multiple meetings down the line. And in 6 months from right now, we'll call it 7.5, because that's kind of exactly what it is, okay? In that time, you'll be dealing with comps on the energy spectrum that are above $100. Can crude go higher? Yes, it can. Could it be sitting at 150 or 160 by then if the war is really raging still? Yes, it can. But the comps are going to get difficult for the energy prices, which should help the CPI. Rental prices, that's a different deal. We're going to talk Manhattan rental when we get back.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex report. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we got action everywhere in this market. We got the dollar index up more than a full point, a point and 13 ticks right now at 109.09. I mean, look at this thing just from 6 in the morning. You're up almost a full point, man. And look at the acceleration even from 9:15, right? I got this because I don't have this on the Thinkorswim platform, but you're up from about 108.80, up almost 30 ticks to 109.09 right now on that dollar index. And man, it is showing. It's showing everywhere. Not sure that's the reason in crude, but we just got a 90 handle in crude. Crude just dropped $4 since I came on the air, folks, at 91.26. You talk about action right now. Gold contract trading lower as well. These commodities, these currencies, folks, I've talked about it. Please check out the Tiger Forex report. There's just no better time right now with everything going on in this market, the way currencies are moving, the way they're reacting to notes and to bonds. I mean, look at the bond. The 30-year, look at this action, right? Yesterday, huge action. Today, the 30-year just pulled back from 140.07, more than a full point from 7:30 this morning, and then we got a little bit of a bounce from about 138.16. You got the 10-year right now off 26 ticks. You're almost back at the lows that we had yesterday for the 10-year. And how about the yen? We'll do the yen, and we're going to do the Swiss franc as well. Dollar yen we want. Whoops. Yeah, pushing the highs that we had earlier this morning. The yen, 139.28. We got a high at about 4:30 in the morning of 139.33. And U.S. dollar Swiss, USD CHF. And look at this acceleration. Teddy's been talking about this one as well. I know I'm giving him a lot of plugs today, folks, but it's a great time to have a Forex report. Check it out. Lock in 25%. Get it for 30 days. If you don't use it, cancel it, get a money-back guarantee. Look at this trading area, folks. From parity to about 95.5 to parity to 95.5. Where's the next stop? Might be parity. Back to 1. That's the U.S. dollar Swiss franc. And let's check out the euro U.S. dollar again, because they're dealing with some woes, man. And there's a break. There it is, folks. Not flirting with parity anytime more. The euro U.S. dollar breaks well below that level to 99.5 on the euro U.S. dollar. Teddy was talking about 90 yesterday on the euro U.S. dollar. One of my friends is traveling out there in the next, I think, 6 months or so, and he was cheerleading 90 by then as well. That's going to persist, folks, all right? Things aren't changing in the next couple months. But the one thing I will say is eventually you're going to get a heck of a bounce. Okay, Europe's got some real issues, man. The storm that they are dealing with in Europe with dealing with inflation at a time that they are much more vulnerable to energy prices and the volatility and the hampering on their economy, they are not in as strong of shape as the U.S. is to be able to begin raising rates where you won't hurt the economy to tame inflation. Stock market hates it, folks, okay? The stock market can't stand that we're raising rates. But if you looked at the economy overall, yeah, we got a little bit of a pullback, and that's a little bit worrisome. But if you look at just the actual raw economic data of unemployment levels, okay, of the jobs open, etc. Very strong economy, and that's what the Fed keeps trying to allude to. And hopefully they don't hamper that too much in their quest to tame inflation. But inflation is at 9.1%. S&P's right now down about 61 points, trading at 37.44. Let's jump around to some of the other stories I got pulled up here. Let's see. Excuse me, where do we kick things off? Yeah, Manhattan. That's what we're going to talk about. You talk about rising inflation. Manhattan rents soared to a record. So much for New York City being dead, folks. That is not the case at all. Competition for apartments is fierce, expected to get even more intense in the coming months. Traditionally, the market's busiest season. That's not what you want to hear for CPI, folks, because shelter is a huge impact on CPI. I think it's 1/3 of the overall impact is shelter. And I think yesterday you had rents rising at something like 0.8%, a record on a monthly basis. So new leases were signed last month at a median of $4,050. That's tracking data for 3 decades. So topped a previous record set in May. So I guess May was what, $4,000. This one comes in at $4,050, 25% more than a year ago. Yeah, look at that rise, man. You were getting apartments at $3,000 last April. You're getting them at $4,000 this July. That is a dramatic impact on someone's take-home pay, folks. After tax, take-home pay, 33% rise from where you were last April in rents in the city. And yeah, agents and analysts expect rents to rise further in July and August, traditionally the busiest months for Manhattan rentals. So that's going to have an impact, and we'll see how they shake out throughout the year. Now they talk about, every market is its own deal in terms of, I'm not sure if that's quite the case across the country, right? In New York, as students and recent graduates tangle with families seeking to get situated in new apartments before school picks up. I imagine for some degree, there's always a little bit of a shuffle before school, right? You got kids, you got to be situated for the year. You want them to be in the school they're going to be in for the year. But yeah. Soaring mortgage rates reflected in a decline of New York homes going onto contract, also contributing to rental demand. So you might see a pullback in real estate prices, causing even a further rise in rental prices, causing an impact on CPI numbers. That's the one that's really the hammer, man, that all of this can come to roost with the CPI. And yeah, the next article, right? So you go from that one, which is out this morning, to this one out this morning, which is housing shortage spreads across the U.S., becomes a coast-to-coast crisis. New analysis shows deficits surging just before the pandemic, even in areas that had few supply chain challenges a decade ago. We got a problem, folks. In Texas, the deficit rose nearly threefold from 2012 to 2019 to 322,000 homes. Okay, now California is the prime example of a housing market going awry. Decades of underbuilding led to soaring prices and the biggest deficit of homes in the U.S. But in the years before the pandemic, the crisis largely plateaued in the Golden State while it accelerated elsewhere. Okay, 322,000 in Texas from over those 7 years. In Arizona and Georgia, it surged 14 to 27 times respectively, although together the U.S. needed almost 4 million homes in 2019. They need 4 million homes. And what's going to happen right now? We might see a little bit of a pullback. I mean, we have a neighborhood right now where I am, folks. I'm in Bartow, Florida. And there's a neighborhood adjacent to me that I think they're building like 1,400 homes. 1,400 homes. They're basically building a little city. And I think it's Lennar in there. It might be D.H. Horton in there. There's a few builders that have combined for this one build-out. It is literally a city that they are building. Rhodes, everything in there, of course, 1,400 homes. They're going to have to pull back on prices or something, man, right now, because there's no way they're pushing out mortgages at a 30-year at 5.5%, thinking that they were going to get the prices they were when they were building that out about 6 months ago. They haven't even started popping up houses that are done yet. So think about how long it's going to take for those houses to go to market, and still, they're going to be having to pull back those prices. Checking out Florida. 289,000 is the amount of deficit. That's the amount of housing under production by state in 2019. Texas, California, let's see where Massachusetts is at, 108,000. Comparatively to population, 108,000 is pretty lofty. I think Florida's got almost 3 times the population of Massachusetts, if I recall. About 22, 23 million, something like that, population in Florida. I think Massachusetts is about 7 million, something like that. All right, folks, we got one more segment. We got the S&Ps negative by 60. Stay tuned, folks. Right back. We'll take a look at some of those banks. See how they're trading this morning. Right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps off an even 1.5% right now, trading down 57 points at 3747. The NASDAQ 100, you're off 1 1/3%, 11,597. The Dow off 1 2/3% right now, trading 30,249. We're only 250 points away from that 29,000 handle in the Dow, and the Russell off 1 2/3% as well, 1,600 handle on the Russell. Gold contract right at about 1,700. Gold getting hammered down about 2%, down $35 at 1,700. We got dollar strength continuing. The trends are continuing, folks. And how about crude? Pretty decisive break for crude. Lowest prices we've seen in crude since this thing broke above $100. Yeah, pretty much. I mean, you're back to basically late February prices. Haven't seen these price levels since then. Crude trading at 91.83 right now, even since I came on the air. Crude down about $3 or $4. We'll see how that one shakes out. And we jump to notes and bonds, lower prices, higher yield. You got the 10-year right now down 25 ticks at 118.04. Still well off the lows we had back there at 114.07. But decently off the high spike high we got only 8 days ago of 120.16. All right, let's jump around and see how those banks are trading this morning. JP Morgan lower, but off of the lows. We got a 107 handle. We're down 4.1% for JP Morgan right now. Morgan Stanley had their numbers as well. Not quite the same hit, but Morgan Stanley down about 2.4%. We do get Wells Fargo. They'll be talking about Wells Fargo coming up on Fast Market at 12 o'clock. They get their numbers out tomorrow. Wells Fargo taking a little bit of a hit with the other banks so far, off about 2.7% right now for Wells Fargo shares. And let's jump around to some of the FANG stocks. Amazon, they wrap up Prime Day. I got a few things actually this year for Prime Day. They had some good TVs. I got sucked into the deal. Hopefully it wasn't an impulse buy. I don't think it was. The kids needed a TV for their playroom. Pretty remarkable what the pricing of TVs is, folks. An Amazon Fire TV, we'll end the program here. And I do have some Amazon shares in my retirement account. An Amazon Fire TV for 50 inches was $260, I think. 4K. A 4K 50-inch TV, $260. A 55-inch, $285. Smart TV, 4K. Remarkable technology. All right, folks, thanks so much for starting your day with me. Stay tuned. We got our man Basil Chapman. He's up live next. Larry at 11. Fast Market at 12. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Thursday, everybody.